Hey guys, it's Crossroads here. Today we're going to look at who might be concluded in the S&P 500 next month. Now the announcement is actually tomorrow after hours. Usually it comes out about an hour and a half after the market actually closes, well after options can be exercised. And typically the S&P 500 announces about 3 names to be removed and 3 names to be included. We don't know how many spots there will be freed up, but I'm guessing about 3. Let's go ahead and take a look and see what I'm predicting for this coming announcement. Now, first and foremost, what I think is that there's a company that a lot of people haven't talked an awful lot about, but congratulations if you're in it. It's this company right here, AppLovin. AppLovin is up an incredible, this is not an error, almost 900% year to date. They do mobile advertising. That's mostly what they do. They do a few other things as well. And they've just been on quite the tear. Their market cap puts them at one of the largest companies, if not the largest company, of a publicly traded company that's eligible for the S&P 500 that is not yet included. So this is one of the things that Palantir had going for them last quarter. They were the largest at the time by market cap of any company not in the S&P 500 that was eligible. And so AppLovin is in that position. They have phenomenal growth, not just in terms of the stock, but also in terms of their actual revenue. And so I think that there's a very, very good chance, unless for some reason no companies are excluded and none are included, that AppLovin gets in tomorrow. How am I playing this? I'm not. I'm staying away from this one. But congratulations, anyone that is holding this ticker, by the way. Next one in tier one as well is Robinhood. Robinhood is one of those companies that, of course, I've been talking about for quite some time. I mentioned last quarter that Robinhood was eligible, but probably would not get in. In fact, they're eligible 2 quarters ago. Eligibility, of course, requires profitability for over the full year on average, and so you can actually have some negative quarters as long as you're technically profitable, and you need to have a market cap, I believe, of above about 18 billion for market cap, a little bit over 18 billion. Robinhood hits that. It has continued to grow well. It grew close to 40% year over year this last quarter. Let me share this with you and show you why I think that there's a very good chance that they get in over the next competitor I'm going to mention. This is showing their institutional shareholders, at least by an estimate, 88.08%. I see some estimates as high as 90%. This is a company that institutions hold a lot of. I thought that was one of the weaknesses of Palantir last time, but there are times when phenomenal companies that are very retail held do get in. And that was Palantir last quarter. This quarter, I think that the market looks at Robinhood. They see the phenomenal growth that they've been putting out. They see the EPS. They see, of course, the vision. On Wednesday, at the NASDAQ in New York City itself, Robinhood hosted their Investor Day event. I don't think that it was a coincidence that it was done in New York, which, of course, they have offices there, in NASDAQ, which is very interesting, and right shortly before the announcement of the S&P 500 committee. Could have been coincidence, maybe not, but I think that the street, and you can see that in the stock price reaction, is very impressed with the vision and direction of Robinhood, as well as the level of execution. I know I certainly am. And I think that Robinhood probably has about a 66% chance of getting in the S&P 500 as long as there are 3 names announced. Now, there's another one that's very similar to Robinhood, and that is Coinbase. Coinbase, of course, if you look at the market cap is looking very, very good. It's at $80 billion. Of course, they have phenomenal revenue growth. And, of course, EPS, they've been positive for a while. The thing is with their EPS, you can see how lumpy this is. And that tends to be something that the street doesn't, or the S&P 500 committee rather, doesn't necessarily like. It doesn't preclude them from getting in. But I think that they may be looking at this as an aberration and wanting, you can see they're just barely profitable here the last 2 quarters. Actually, last quarter is pretty decent at 0.3 for EPS. But you can see the estimates are quite robust. I actually think they're going to have a phenomenal quarter 4. I think at that point, the market will realize, or the S&P 500 committee will realize, that this is a company that is going to be here for a long time, and they'll likely get in the next time. I just think that this time, Robinhood has a slight advantage just because of the institution holdings and because they're a little bit more predictable and even as far as their income. Now, the next company that I'm going to share is one that I regard as a tier two company. What this means is that I think that they probably won't get in. I've been wrong before. I put Palantir as a tier two company last time. I had Dell as a number one. I got that right. But Workday last time I actually put them as a tier one candidate. Why am I downgrading them from tier one to tier two in my mind? Saying that there's a chance, but I wouldn't say it's likely. Maybe less than a 1 in 3 chance of getting in. It's this right here. You see this negative EPS number. That doesn't prevent them from getting in the S&P 500. After all, you can look at this ridiculous EPS growth. I don't follow Workday. I don't know what that's from. It's probably a one-time thing that happened to them, especially because they are an ERP that is based on subscription revenue. But they had some deliverables that ended up not showing up in the third quarter that they expect to show up in the next year. And so we'll have to see. But you can see the EPS that's expected for Workday. What I think is going to happen is the street will recognize that this is a quality company. It meets all the requirements, but there's others that are a little bit better. It probably wants to see this number go away, which it will in the next quarter. And they want to see what this number looks like as well as guidance going ahead. If this is anywhere near accurate for their EPS, this is a company that's a shoe-in early next year, I think. We'll just have to see. Now, another tier two candidate that is very interesting was tier three this last time is Datadog. Datadog actually hits all the right buttons. They are in an interesting space, of course, data and software. They're a SaaS company that's growing very rapidly, not as rapidly as Coinbase, but it's a little bit more reliable at 26% year-over-year revenue growth. Their price to earnings is extreme, but that's not something that the S&P 500 cares that much about. But let's go ahead and look at the EPS. So EPS, you can see here that they have been profitable now for 5 quarters. This isn't like the most amount of EPS ever, still looking good, but you can see what it's expected to leap to next year. And I think when Datadog makes that leap, either after the quarter 4 revenue comes out or quarter 1, I think at that point the S&P 500 will look at Datadog and see them as much, much more attractive. But I would say that there's a decent chance that Datadog does get in. I just wouldn't bet on it personally. Another that is in the tier 2, which I didn't even mention this last time, is this company right here. This is Vertiv Holdings. Vertiv grew phenomenally from 2022 as part of this AI rush. They provide cooling solutions, especially for data centers. And as a result, they're up big time. But if you look at their revenue growth year over year, it's 19%. That's not the most important thing for the S&P 500 committee to look at. They are very profitable. You can see market cap is about $50 billion. If we look at the estimates for EPS, you can see that they had a quarter that was negative, but that's no big deal. Their EPS is actually quite robust. The expectations are actually quite good as well. So I think that this is one that might need just another quarter or two, just because the competition is like so appetizing as far as with AppLovin, Robinhood, and Coinbase really just killing it as far as what I think the S&P 500 is looking at. I could be wrong. Maybe they get in a little bit earlier or later, but this is one certainly I wouldn't necessarily sleep on. The Trade Desk is another one. Let me pull that up right quick. The Trade Desk is one that I think is a company that is awesome. It's one that I've never been in. I actually listed them as a tier 1 company this last time. Jeff Green is a phenomenal CEO. They're in the advertising space. I think there's 2 things going against the Trade Desk this time, and so I put them in tier 2 for that reason. One is AppLovin is in the advertising space, and I'm not sure the S&P 500 wants to add both AppLovin and the Trade Desk in the same quarter. They might. It's been done before. It just doesn't happen all that often. Revenue growth was okay. It was at 27% year over year. I know that's good for most companies, but it's actually down for what they usually do. And so their quarter 3 actually had some misses. Look at the revenue not the revenue, but the EPS estimates for next year. They, like a lot of the companies we're looking at, just skyrocket. Part of that certainly is because of those corporate tax rates coming down, but that's not the only story here. I think one more quarter in the Trade Desk is likely in. They most likely don't get in unless there's more than 3 candidates offered, although their time is very, very soon. Now, you might be asking and saying, what about Block? What about SoFi? What about some other company? Now, usually there's one that I miss each time that just a company I'm not aware of that's public, or it's one that I just don't pay much attention to. So there's probably one of those that's going in. I would say it's a little bit early for Block. They are technically eligible. But the market cap and the EPS do need to grow. SoFi is positioned in that way as well. Let me show you what I mean for SoFi. So let's first look at the summary here for SoFi. You can see as far as market cap, they're actually $17 billion. So they, I believe, are no longer eligible for the S&P 500 inclusion this quarter. It's a matter of time, but it will take them a little while. And if you look at EPS as well, they're profitable, but we're talking about just barely. In fact, you can see here just 5 cents, 1 cent here for EPS. And of course, I think that these estimates for EPS growth are completely wrong. But nevertheless, it's just a little bit early for SoFi. It may take a couple of years for them to get in, and that's okay. I think it's a matter of time before it gets in there. Plenty of banks in the S&P 500 too, which is perhaps a factor as well. But what do you think? Tell me if there's a company that I'm missing. I'm sure that there is that you think might be included after hours tomorrow per the S&P 500 announcement. Do you think that I should have put a tier 2 or tier 3 candidate as tier 1? Do you think I'm mistaken about AppLovin, Robinhood, or Coinbase? Let me know in the comments. I would appreciate that very much. And as always, thank you for liking, commenting, and subscribing. For now, happy investing.